Phoenix real estate market might be in for a summer bummer. But I suppose it depends if you're a buyer or seller if you really think it's going to be a bummer. So let's get into it. Today I'm actually starting with the contract ratio, which I don't always start with, but today it is a headline because over the last month we have seen a 15% decrease in the contract ratio. Now, if you're not familiar, this is something that the Cromford Report shares, and it is the ratio between the number of listings on the market available for sale and how many of those listings are actually under contract. And this is a really great measure to see the heat in the market or how cool the market is. Because it's not seasonally adjusted, it's just really showing how quickly and how many listings are going under contract, what that ratio really looks like. So a month ago, this contract ratio was at about 54, and now we are at about 46. And this is kind of hard to see and get the exact bar, but according to the Cromford Report, that is the difference over the last month, which is a 15% decline. Now, if we're at 46 on the contract ratio, so if you remember their little key over here, 30 to 60 is a balanced or warm market. So the change between 54 to 46 still keeps us in that range. However, we are going lower. We're getting closer to the bottom of this balanced warm market, which would border on a cold market. And you can really see the change on this map. I love to see this because it's all color coded for each zip code and what their respective contract ratio is. And if we just press play here, this is going to take us through from March 2nd all the way to today. You can see how these other zip codes started to heat up and then began to cool off. Towards the end here, we start to see a lot more green than we had back in March. There's still some warm areas, but for the most part, things have cooled off into this like kind of warm, hot range. And then we just have a few zip codes left that are in more of that like hotter, as they define it, contract ratio. Now, they say that the pricing has been strong for the first 5 months of the year, but it's unlikely to stay that way as we enter the hottest part of the year. We're already seeing evidence that the dollar per square foot pricing is having a rest after unexpectedly strong peak that was achieved on May 8th. So all in all, we're starting to see this softening. The contract ratio, we're seeing it in the CMI. I'm going to show you there as well. And then ultimately, we will see it in prices if this continues. And we do have some indication of price softening as well, which I'm going to get to towards the end. So stay tuned for that. So what else is happening? Well, our pending home sales have had a 7.7% drop. This is on a national scale. This information is from Mortgage News Daily. They say pending home sales fell another 7.7% in April, according to the National Association of Realtors. And this is no different from what we're seeing in Phoenix. I'm going to show you what that looks like. But here's the little graph of pending home sales for all of these different regions: Northeast, Midwest, South, and West. All of them have taken this dip here, you can see over the last few months. So we've seen a big change in pending home sales. Why does that matter? That means that demand is lower because these homes are not going under contract like they used to. So when we look at what's going on in the Phoenix area at our listings under contract, if I take off these previous years so we can actually see what's going on now, there has just been a decline since April. This was a pretty big drop, but this is really just week to week. So, it's hard. That's not necessarily a trend, but we are kind of seeing over the last 3 weeks, this has been going down. Since the start of the year, our demand was going up and up and up. And then we saw those interest rates, those darn interest rates, go higher and hold higher. And since then, we really haven't seen this increase in our demand any longer. We've just been seeing a softening in demand. So what's going on with interest rates? Plenty of rate volatility despite holiday shortened week. This is the latest from last Friday, recounting last week. There was a lot of volatility last week. We did end the week with a little bit of a recovery in rates, according to these sources. So it's always good news when that data comes in as expected because there's no surprises there. So that helped a little bit. And this week, we're anticipating the jobs report coming out towards the end of the week. Next week, we will see the Fed meet as well. So more to come on mortgage rates. So make sure that you're paying attention to that if you are a buyer. Mortgage demand slides to lowest level since early March. All of this is not surprising given the information I just shared. Mortgage applications slumped heading into Memorial Day weekend. This is a little bit dated, but I don't think we've seen that much change in this, which is why I'm still sharing it. Applications decreased 5.7% on a seasonally adjusted basis during the week ending May 24th. That was according to the Mortgage Bankers Association. Like I said, these rates really haven't moved off of 7% all that much in the last couple months, and it is beginning to take a toll on buyer demand. They're just not that motivated by these rates. And so the less demand that we get, the more we will start to see this affecting our market and softening it. And that is really the beginning of what I think we're seeing right now. If things don't change, I think we are in for a pretty dull summer. Now, for buyers, that's exciting news because we may see some weakening in pricing, and there's some beginning indications of that. For sellers, that means you better be ready to price your home appropriately and better be ready to negotiate because buyers have choices and you have some competition. Now, if all of this is helpful for you, make sure you hit that like button and consider subscribing. We're here every Tuesday talking about what's going on in the Phoenix real estate market. Price drops hit the highest level in 18 months as high rates dampen buyer demand. They're saying that nationwide, 6.4% of home sellers cut their asking price during the 4 weeks ending May 26th. On average, the highest share since November of 2022. The median asking price dropped roughly $3,000. That is great news for buyers that we're starting to see some softening in pricing. You can negotiate a little bit more. You're seeing these listing prices come down, which ultimately will reflect in those sales prices. So I do want to be very clear that this is not sales prices. Overall, home prices are not coming down, but list prices are. Now, whether or not that means the seller listed too high to begin with, or just decided to start making cuts because they were spending too long on the market, whatever it is, we're starting to see enough of that where the median price dropped by $3,000. Again, this information is based on a national scale, but we're going to look at what's going on in Phoenix, of course. So let's take a look at what's going on with price changes here in Phoenix. This is the number of price cuts on a weekly basis, and this is for the week ending May 26th. We saw 2,171 listings take a price cut. That's a lot. Now, it's not as much as it was a few weeks ago, but that's a good number of the listings on the market. And it's clearly just been climbing since the beginning of this year. We're starting to see more and more sellers take price cuts. With the exception of the last month, it's kind of tapered off a bit. Now, the median change on all of these prices is $10,000. That's been pretty standard for a long time, clearly. But that is what we're seeing in the Phoenix market is about $10,000 is the price adjustment that many sellers are making to decrease the price of their home as it's listed on the market. So we're seeing the contract ratio down by 15% over the last month. We're also seeing pending home sales down by 7% nationally, and a very similar trend going on in the Phoenix area as well. In addition to that, we're seeing very stubborn mortgage rates around 7%, and ultimately sellers beginning to cut their list prices. So what are we in for this summer? It might be a soft and slow market. Cromford Market Index has come into a balanced range. We're at 106.4 this week, and you can see that demand has been going down. This hit 80 a few weeks ago. We're now at 78.7. Although it doesn't seem like a big change, at the same time, our supply is growing. It's at 74 now, and these two are coming closer to meeting at the same number, which means we'll be in a fully balanced market when those two numbers meet. And technically at 106.4, we are in a balanced market. Anything between 90 to 110 is considered balanced. So if we continue to see demand weakening, which is very likely if rates don't move at all, and supply increasing, which is very likely if we don't see those listings under contract and those pending home sales increase and demand stays low, then we will get ourselves into a buyer's market eventually. How long that might might take, I don't know. Right now, we're kind of moving at a snail's pace. But when you start to see supply above demand, that's when we are in a buyer's market. I've said this before, and the Cromford Report has always shared this, that before we ever see home values going down, we're going to see an increase in seller concessions and an increase in the number of listing price cuts. Right now, we are seeing those listing price cuts increasing. Seller concessions have been on the map for a while. So is it a matter of time until we start to see home values go down, or will we continue to just coast in a balanced market? It's hard to know for sure, but we are seeing some of those initial indications. Now, here's where we're at with the Cromford Market Index across the valley with every city. And you'll see there are quite a few red arrows on the board this week. The average change month over month is negative 0.8%, which is down from 0.1% that we saw last week and continuing this downward trend that we started to see 2 weeks ago. The Cromford Report is saying that the market is deteriorating for sellers as supply continues to creep higher and demand remains much weaker than normal. We expect more impatient sellers to increase the size and frequency of price reductions. So good news for you buyers out there. Keep an eye on these listings because maybe you'll have an opportunity as they start to decrease their prices. Or you can just go in with a lower offer and, hope that they were planning on decreasing their price anyway. There's 5 cities that show an increase in the CMI over the last week. Everything else saw a decrease. And if you're new here, this is a different trend than what we have been seeing for quite a while. We were seeing a lot more green arrows than red. So now we're back to this place where we're seeing more red than green, meaning that we're seeing a slowdown and a deterioration for sellers. Now, as they said, supply is continuing to creep higher. So I wanted to make sure we take a peek at that this week to see where we're at with our active listings. And this week we're at about 18,000. It wasn't too long ago when I was saying that we were at 17,000 listings. So this has continued to climb up. It does look right now like we've plateaued a bit, but time will tell if this is going to stay or if we're going to see a continued increase in the listings on the market. I talk a lot about the market conditions, but one thing I think is important to remember is that different cities, zip codes, and even neighborhoods behave differently. So although we're looking at the market as a whole for Phoenix Metro, your city or zip code could be a little bit different than what we're seeing overall. So for that, I actually have a market snapshot that you can take advantage of. I have a link in the description below. So make sure to check that out so you can know what's going on in your area as far as average sales price, days on market, all of that good stuff. And of course, if all of this is confusing and you're not sure what to do, you just want to talk and figure out your situation, we also have a link for a discovery call with our team where we can talk through your situation and help guide you on what would be best, whether you're buying, selling, investing, etc. So check that out, and I'll see you guys next Tuesday with another market update.